there, everybody. Allison here. For those of you who don't know me, I am the Director of Risk Tolerance here at Simpler Trading. And in this video, I am going to talk about Google. Now, for those of you who listened to last week's earnings video, right, and you set up the compound butterfly strategy, then well done, because that worked out beautiful for a quick profit and win off the gap to the downside. So excellent work, y'all. If you didn't, right, or you're wondering if there's still a chance to continue to trade Google, I think so. However, you might want to be a little bit mindful because this week is Fed news week. So if the Fed news, for whatever reason, causes a really bullish market reaction, that could cancel out the dynamic that's happening here on Google. But the reason why I chose Google is, one, it's been a lot weaker compared to a lot of the bigger names out there, right? Amazon, Apple, both of those, even though Amazon's followed more along with the market, both of those have done a bit better of a job of trying to maintain above their 100-period simple, at least at some point this year. Google, however, has really struggled to be able to hang on to the 100-period simple at all whenever it's tested it. We've never even seen it quite get into a bullish run. It just barely breaks above it, stalls, and then ends up reversing back down. So that's part of the reason why I chose Google here, because it is a bit weaker. That way, if the Fed news does cause a bounce, right, this still has the ability to maybe do its own thing to the downside. If the Fed news obviously is negative market reaction, then that could certainly be the catalyst for this to continue lower. The reason why I like this, though, is because even after the gap to the downside, we, one, started to break the price level here. So now it's trying to act a bit more as a resistance rather than a support around this 95 range. And two, even with the bounce up that we had Friday, today the Bollinger Bands are already starting to open up again. The momentum has continued to weaken itself below the zero line and has plenty of room to move down to the bottom of the axis. We have a valid bearish signal, and then we still have a valid squeeze. If this does continue to drop off, the 10-period simple, which is completely converged with the 30 right now, will end up rolling down off of it and will go back into a bearish trend. So I like the possibility that Google could continue to roll to the downside and continue with that next leg lower. Now, with that in mind, of course, you want to be very cautious of the capital risk that you put out there. You might want to give yourselves a little bit more time. So, for example, you could technically look to go out to something like the November monthly expiration. But as of today, this might seem a little bit close 18 days out. You can see, though, you have the dollar strike increments. You could just go in with a long put, right, and look to play for the more stair step lower, at least down to 90, if not a continuation move. If you really want to give yourself a little bit more wiggle room in case the Fed news causes a bounce before a reversal, you might consider going out here to December then, right? That's 46 days out. You still have the benefit of a dollar strike increment, at least all the way up to 100. And you could still look to play this directionally with like a long put, right? The 87 put, for example, is $1.93. That's not too bad. Or if that still feels a little rich, or maybe you want strikes that are slightly higher, you could always look to do a spread. The 90.85 strike is about a $1.23 cost basis, 377 profit potential, not a bad risk versus reward whatsoever. And it certainly gives you plenty of time to try and see if we don't stair step lower on Google and try and find a new support level to test. But Google, to me, with the squeeze still valid, with how much room there is on momentum and the bearish signal here, I like the possibility that this could just roll over and keep going. The only thing I would say to be mindful of is if you get in before Wednesday, because you think Wednesday will be a catalyst for a move lower. So I understand you might want to get in before, but if you do that, please just understand to keep your risk low in case it's a surprise move, right? And it bounces the market back up. And then also consider maybe giving yourselves a bit more time. So in case that does happen, you have the flexibility to maybe sit through a bounce into resistance and see if that holds for the rollover back down. But that is my time today, guys. Otherwise, for myself, I am looking to be pretty light overall going into the Fed news. because right now in the markets itself, we're kind of in a wedge pattern here between the 100 period simple and the 10. And we know how when we trend below the 100 period simple, just like with Google, right? Oftentimes this is a place to consider potentially shorting it. At the same time, though, we've been selling off quite a bit this year. So I don't want to, jump the gun, if you will, and, load the boat too soon or anything like that, right? Never, not going to happen. But it does have me be a little bit lighter on capital. So that way, if I get the catalyst to the upside, then I know I have some targets I can play higher. If resistance ends up holding at the 100 and we start to break down, then I certainly have a few trade ideas and stuff I can set up for a move back down into these support levels to test and looking for that rollover. But until then, I think we're going to basically sit here in kind of this wedge pattern and consolidate until that Fed announcement happens. And then maybe even into next week with the elections and CPI kind of being a catalyst too for a bigger move. So until then, I'm looking at things that are inexpensive, that I like the setup on, but I can still keep my risk very low on until I decide to get a little bit more heavier in my account again. So thank you guys so much for joining me. I hope you have a great rest of your day. As always, may the trade be with you, my fellow Jedis, and I look forward to talking to you next time. Bye. Hey, Allison Ostrander here, Director of Risk Tolerance at Simpler Trading. Thanks for watching the video. If you enjoyed this video, please be sure to like and comment down below to help us out. Also, be sure to subscribe and click the bell icon so you can get notified when we release our next video. And if you want to watch us trade in real time using our own money, go to simplertrading.com to learn how to sign up. As always, may the trade be with you, and we'll see you in the next video. Bye.